All right, hello everyone, and welcome to today's weekly market check-in with myself, Greta Wall. I'm your host today, and David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Hi, David. Thanks for doing this with us today. How's your day going so far?
Uh, Kind of like quiet. Like I mean, fine, but just quiet
hmm
because I'm not a big fan of the market here. So
hmm
less is more day. But we did okay from the AM on, and then
All
just
right.
quieted down.
Good, good. All right. We will definitely discuss why you are not loving the market here in a bit. But first, we're going to talk about the CPI and whether it actually matters to the market, because that is, of course, the big number that is coming up this week. So CPI is coming out tomorrow morning. We'll get the August CPI at 8:30 a.m. Eastern, and then Thursday we'll get some more inflation data with the PPI at 8:30 a.m. But does this even matter to the Fed anymore? The Fed has said, of course, that they are focused on the labor market, not inflation. So how is this inflation number a bit different than the ones for the market than the ones previously this year?
Let's say on a scale of 1 to 10, typically it's 9 or 10, along with PCE. Right now, it's like a 2. Right? I mean, everyone is very concerned about the consumer and the economy, especially after today's news. And we could have a hot report and still go higher. So it is of very minimal importance given where we are in the market at present day, in front of a Fed meeting where we already know they will clearly be cutting rates at least a quarter point at the very least. So minimal importance right now. What is important is our economy falling apart? Are too many people losing jobs, and will earnings be lower than anticipated next year? So
Mhm.
CPI, less important.
And as you mentioned, we're focused on the economy and jobs, and we are, of course, in an environment post jobs report last Friday. The job growth was weaker than expected in August. So that headline number came in at 142,000 versus 161,000 expected. And we also got some really large downward revisions to both July and June, making those numbers weaker than they previously were as well. The question, are we going to get a 50 basis point cut? The market is still pricing in 25 basis point. I think it's over 75%.
71, 72,
Yeah,
something.
as of this morning. So I don't, but could the CPI possibly be like maybe a changer in 50
No,
or 25?
no, no. JPM and Allied would be what changes that. So right now,
Gotcha.
remember, it's what's going to change or push our Fed forward is much more about jobs, not inflation. So if jobs, and he's actually said that jobs get too weak, if the economy shows too many parts are weakening much quicker than than they and the rest of us anticipated, then they're going to step up rate cuts. It's not going to be because it turns out inflation is lower. I mean, he is a pretty cautious Fed chairman, and he's pretty much told us I'm not too worried about that. We're going in the right direction. Right now, my focus is where are we on the jobs? Where are we in the jobs market and the economy? So I think if anything is to push them to cut faster, it's JPM talking about lower earnings today at the conference, or Allied Financial talking about subprime being an issue, and people not paying their debts. Things like that are going to push the Fed to act a bit more aggressively. I don't know if they
Yeah.
will, but that's what will move the needle for the Fed.
hmm In addition to the data that we're getting this week, tonight is debate night, and the market is, of course, focused on the what's happening in politics and the presidential race. Trump and Harris will be debating tonight at 9 o'clock Eastern time. Do you think this is a market moving event? And if so, which sectors do you believe could be impacted? Whether Trump is the perceived winner of the debate or Harris is the perceived winner, etc.
So there's certain areas of the market where, like, if people ask me about oil, someone asked me about oil stocks today, and I've been very bearish, the commodity as a whole and the chart, for a lot of reasons. I don't want to get like digress too much to make this confusing, but they're like, "Do you like any oil stocks?" I said, "No." I said, "Oil's going to get oversold soon. Maybe USO gets to 65s, and I'll buy it." But I don't know enough anymore. I used to follow Transocean, all of them. I don't know enough about the sector anymore. So I probably would just stick with the commodity itself. Now, when it comes to the debate tomorrow, I feel the same way. So I know what sectors might move based upon what side of the aisle is a winner tomorrow night. But overall, is there a trade there? Not my expertise, so I won't focus there. I do know solar can move versus uh, in terms of if someone like Trump wins, who's a negative for something like green and solar versus Harris. And I also know that right now everyone envisions, whether they're right or wrong, that Bitcoin is a Trump trade. And if Trump is the winner or so-called perceived winner, that then Bitcoin could trade well. Those are the two sectors that maybe I would say would be most affected. But I'm not trading off of the event. I will be
Mhm.
just a viewer.
Mhm. All right. And then Apple today is down after hosting their Glow Time event yesterday. They did announce new iPhones, watches, and AirPods. What do you think of the market reaction to that event and
One,
your analysis overall of what they announced at the event?
1 second.
Yeah, you're good.
I am trimming some JPM. Okay. Uh, okay. Hey, so what was the question?
Apple after the Glow Time event. What do you think of the announcement and the market reaction to yesterday's
Oh,
event?
so I think, well, so I went short earlier on because I just thought, you know what, people are going to get a little nervous. Maybe it won't live up to snuff. And I went short the stock pre-market yesterday, right? And then before the event, I said, let me view the event. I made a couple dollars and got out. I said, let me now like actually listen and see if there's anything that maybe wasn't anticipated that moves the needle. And what I told Inner Circle by midday was this. I said, there's nothing here that's awful. There's nothing to pick apart and say, oh my God, Apple Intelligence, what a joke. Like, I mean, Google has flat out introduced products that you ask a question and it turns out they're AI thinks like Lincoln is presently your president, right? Like weird, crazy things. There was nothing like that. All went fine. Was there anything shocking that moved the needle to make you buy the stock? My thought was no. Some people laugh because they think of Apple as a critical, like ahead of the game, cutting edge design. I mean, most people that understand the market understand Apple's more of a design company than it is a tech company for many, many years, right? So everyone wants the days of old with Steve Jobs. That's gone. Right now, it's just one of the best run companies in the world that produces endless cash flow. And there's still that. The people that were looking for cutting edge, like wild, this or that, no, that wasn't there. Does sleep apnea have a huge market? And did they mention it? And does it have something that really is a use case that could have a huge market to it? Yes. Like AirPods being a hearing aid and adjusting to one's ailments in terms of hearing, is that a big deal? Yes. Are these things that make you go out and say, I never even envisioned that Apple's going to 300? No. So I thought, listen, we probably kind of sell off a bit. It rallied at the end of the day when tech rallied. And today I think people are waking up and saying, okay, it's got to absorb, yesterday and just kind of chirp. It's trading just fine though, considering the market, considering that they had this tax ruling in Europe. So I'd say overall, it was exactly as expected, nothing negative, and just needs a rest because a lot of people buy into these events, even though it's well known that Apple is a typically sell the news event. Given the rebalance next week, it seems to have a really solid bid, and I think today it's actually trading pretty well considering the rest of the market. Where are we right
Hmm.
now? Yeah, down to $1.70. I mean, trading just fine.
Yeah. Do you have any levels that you could share on Apple?
Sure. 217 yesterday was like a big deal. They tried to break it and it held. If it doesn't hold that level going forward, I'd say 213. It's messy, right? There's little pivots like 213, 212, and ultimately where it bottomed in August during the yen crash is going to hold, and that's the 100-day, which is far away, 206.70, but it has held the 100-day rock solid, and that will probably hold again if for some reason we get some big pullback. So 213, 212, and 20 right in front of the average. So I like to say 207, even though the average is 206s.
All right. All right. Let's talk about how you're feeling about the overall market. Are you still bearish? I think I could guess, but we'll talk about it. You came into September more bearish, saying, you didn't like the market environment. September, of course, always seasonally is a tough month for the market, but you expected things to be pretty bad. How are you feeling now about this environment, and what are you doing differently from August?
I am not just buying stocks. I'm buying levels, and then I'm taking profits a bit quicker because I think it is a market to net money and trade. And if you're only a swing trader and not a swing trader of a few days, I think it's a market that is not cheap, has a few less catalysts, rough time of year. So the best way I can explain it, not because it was a good trade, is yesterday. It's where do I see opportunity today and over the next week? And there's less and less on the long side. So yesterday, as Google was getting absolutely decimated and was at 25 relative strength, an extreme we haven't seen in a while on Google, I said, everyone thinks they're going out of business. Oh, you have it up there, cool. So so I said to everyone, we didn't chat before, so I really didn't know she had it up. Anyway, the point is, Google yesterday, you know, a lot of people, if they don't know me, are like, why would you buy this broken name? It's hitting lows. And if you know me, I don't do this with some rinky dink $10 small cap, but when it comes to a Google or an Amazon, I've done it, and I've done it for 30 years and it's been okay. So what I basically looked at is a very oversold stock that was hitting a Fibonacci level, and saw a big level that I'd be excited at, 145, 146, which meant 147s I had to buy because I like to say if I'm exact, I missed the trade. So long story short, yesterday I saw a level, said I'm buying half a position. I hope it goes lower. I have no clue why, but it bottomed right there, low 147s, and in a straight line, including this morning, went to 151s. And I said, you know what? That's enough. Like, I'm bearish the market. Google has, a big fight with the government ahead of it. It's not time to be a hero. I'm up $4. I am out. And I even sold some when I was up $2. So that's how I'm handling this market. I am long-term swing on a few ideas, but for now, I think it's a market to lock in gains and be more of a trader than if you're on the long side than just a swing investor. Furthermore, last Friday, markets got ugly. Nvidia hit a level I really liked on the chart because we've made money there. And I had pointed to it all week. I said, I don't like Nvidia. I don't like Nvidia. Everyone was like, you like it at 205. You like it at 204. I was like, no, if it goes lower, 201, I like it. Then the mid 90s, then 90. Got to 201 on Friday. I bought it. Today it was 208. And I'm pretty darn small. I think, and by the way, I'm happy with $7. But my point is, I wasn't going to be like, wow, Nvidia's going to 120. We are in a market that is bending, that has a lot of things against it. And the more it bends and the more things against it, the more positive I am for October. When we get through this period, we're into a rate cut and we can start to look at when, frankly, things start to get exciting. Because last year, if you remember, mid-October, all of a sudden, IWM came into play and a bunch of other parts of the market, right? We broadened out. A bunch got more, let's just say, more was in action, right? It wasn't just Mag 7. I think that'll happen again. I just think we have to get through this period. So I kind of hope we go lower, and I kind of hope I'm right. I think we're about, I don't know, halfway there. I was hoping on the Qs. This is how to play the market for me. I was hoping the Qs would go to the 200-day, 441, maybe even break it, scare some people out. On Friday, I said, you know what? This is not a market to make things easy. We'll probably open up Monday. We have no reason to, but we'll probably open up. So I bought SOXL to represent SOX, which was getting oversold. I bought Nvidia that I just said 101s, and I bought TQQ for Qs. And today, I think I bought it like 56, low 56s. Today it was 59. I said, all right, I'm done. Because ultimately, I think we're going to trend lower. So I'm just taking Q trades, locking them in, and trying to listen to the market, which is telling me, yeah, the economy may be weaker, the consumer may be weaker, and a lot of things maybe the market's not prepared for. And one rate cut, especially quarter basis point, won't just fix things. So I'd like to see lower, weaker, a little bit of panic, some higher VIX, and maybe then I can be more constructive on the long side. That was very long-winded, but that's how I feel.
Very safe to say, I think you have your trader cap on, not your investor cap in this current market. Let's review some of the recent trades that you've been doing in the inner circle. This was from last week. Of course, JPM again getting decimated today, but you had a big win with some puts last week. You actually
almost an embarrassing trade because I made like, I don't know, 80, 90% and missed 1,000%. So I don't think this is fun to show off about. But this is a good
Well, but
example.
this was you
This is
started this trade and got a lot of other people in the room on this trade, and I would say a lot of other
they
people,
made money.
including Rick, made more.
Yeah,
So, even if you cut too early, the room can win from things like this.
absolutely.
Talk
No,
about what you were seeing with JP Morgan, last week, but also now what's happening with this stock. You're active in this stock today as it is.
so this is from a bit ago.
Mhm.
Everyone was kind of bullish at the end of Labor Day weekend and getting excited, and everyone's rushing to buy stocks. And I just thought, God, and JPM was literally at all-time highs. And I just simply thought, you know what? I hate the setup for markets. JPM is best in breed, but it's trading well above tangible book, like 2.5 times. And you can't really make a case, in my opinion, for any banks here. Like they've built in all the good news. So I don't care how bullish the market is. I got to get short something. And I thought, let me identify my risk by buying the puts. So I bought the puts. JPM then started to go down quite a bit. We did really well. And like you mentioned, the good news is we stuck with it. Even when I got flat and took a profit, many people in the room, once we saw the 10-day break on JPM, which at that earlier in the week was 219. Once we saw that, we knew there could be more downside. And we've really, some people, not me, have stuck with it and been short and done really well. Today, I'm playing it from the long side because it's, gotten decimated. But it has been a focus all week, and a lot of people have been, long puts and short the stock. And it all
Mhm.
started from that trade. So yes, that's correct.
Yeah, great. All right. And then last Wednesday, your levels are just recently, at least, are super on target, really on point. You got the top of the queues last Wednesday. You can see the comments here from the room. Didn't participate, but heck of a call / timing on your latest QQQ short there. Thank you for the queues. I doubled up when it kept going. Thanks, DP. Great trading. You're so good for entry point, almost 100% correct to make money. So talk about this trade, but also if you can remember it, but also it was really quick. But also just how you're choosing these levels each day, how you're sharing them with the room. What's your process?
My process is range trade. And what I mean by that is if we're not in a market, like a buddy of mine a few minutes ago, I'll give an example. A buddy of mine said, are you doing anything? I said, Qs are much stronger than the Dow. Tech is holding up relative to the rest of the market. I think NASDAQ was down 50. He said, is there anything to do? I said, you'd probably be long Qs here. I think NASDAQ will go green again. Um, it's to not over trade the charts, right? So when we had this bounce on the Qs from, I don't know, what was it? It was about 15 points or so. And I just kept seeing that, I guess it was four. I basically saw if we bounce, we go 464 to 466. And I said, let me not be exact. Every time we got to 463, 464, this is a level. And then I explained, if you want to be short, you got to treat it like a long. And what I mean by that is you got to be willing to be a half a point, a dollar 50 early because volatility is expanding. And basically by looking at it that way and not trying to get the exact top, a couple of times I got lucky and got the top. A couple of times I was a dollar early, but we kept rallying and then crashing, and it was good enough. So basically, you had to be a comfortable. I kept saying you have to believe in your thesis. So when you're down a dollar 50 in one of your shorts, because markets that are volatile like this, that have downside, short squeezes are much more vicious than slow momentum trades higher, right? So I said, you have to be comfortable seeing the Qs, if you're shorting them, go against you by a dollar or two, because then intraday, all of a sudden, they're down 4 or 5. So I traded under that thesis unless, if it crosses this exact part, it's breaking out. My thesis was we're going lower. You can short most rallies.
All right, great. It's not just the Qs last week, but you provide levels on multiple stocks that you're looking at in your morning call every day. And so last week, I think this was Thursday, one of your key levels you called out on Nvidia was 101, and you can see awesome Nvidia levels. That 101 scoop was golden on such an ugly day. Thank you. And then of course you can see right there the stock bottoms like right at 101. So you've been on with your levels lately. I got to give it to you.
Thank you. That's more muscle memory. It's really not charts. And what I mean by that is if you go back to the Microsoft print, I said, listen, on Microsoft, let's prepare to trade Nvidia and other stocks because what they say might be much more relative or relevant is the correct word to another name that gives us alpha than Microsoft itself. So their capex goes up, right? And people get concerned. Oh my God, what's the return on spend? And they sell everything off, including Nvidia. It gets to 101. We buy it in size. By the end of the night, it's up, and it's the next day over 110. So you know in your head 101 is special forevermore for a certain amount of time. That's where that number comes from.
All right. And then this morning, Rick caught a great day after trade on Oracle in the room. You called out Oracle as a potential day after trade in your morning call this morning. Explain the idea of the day after trade and how you guys use it so often in the inner circle.
So there's it's funny. What I said is, listen, guys, the day after trade is something we all see and we're familiar with. I just call it the day after trade and we name it, but it's not something you're unfamiliar with. And what it means is, and it's only after earnings and it's only during market hours, meaning not pre-market. A stock opens up, it trades a range for the first couple minutes. Let's say it's 30 by 32. It takes out the higher end of that range. That would be 32. You are long. You then expect it to trend higher by what we always have kind of a target by a certain, by let's say a few points over a certain amount of time, and you trim and trail on the way up with a stop in place because you expect that it should not trade back down. Same goes for the downside. It takes out the bottom end of that range. You're short, and you would be covering on the way down. So Oracle opened up. It took out the top end of the range. I'm forgetting, but it was 154 something. Rick got long. I think he was trimming 156, 158, and ultimately, I think by 159, he was out. And that is a classic day after trade, which simply means a stock that reports earnings, opens up, picks a direction, be it up or down, and you make sure you follow that direction and trim on the way up if long, and cover on the way down if short. With Oracle, great numbers, took out the high end of the range right after the open, and continued higher by 6. That is the day after trade.
All right. Before I let you go, somebody wants to know your thoughts on ICT.
What's ICT?
I don't know. I don't know. Look up the ticker. So maybe you have no thoughts.
No, maybe they're asking that inner circle group. I don't even know what they are. It's some fancy group that's been around for years before me. I never knew what it was. Inner circle
Maybe.
Trader. They may be.
Maybe. Yeah, because that's
I
not
don't know
really
anything
it's not
about
a ticker.
I think they're like well known and have some books out. They're like some. They have special trading strategies. I'm more of a stock guy. I run money and invest. They're like very specific as to like these. From what I know, like how to trade and in and out. There's I don't know. I know nothing about them. How's that? But
It's not related to.
I know they're well known.
Different inner circle.
All
right. Some comments from YouTube as well, agreeing with you. Old CPI only matters if a huge outlier up or down, but otherwise just price action to make us think that it matters. And he also said, thanks to David, he added to my conviction to sell most of my stock sell after the August 5th big rebound. So we've been talking a lot about, of course, what you've been doing since that August 5th rebound.
Stock sell's another one I want to mention. So
yeah,
previous in August, right, we sized up. That was a real focus for me. And so we don't get too long-winded. I'm not going to go why, but really a focus between 25 and 27. And I held a decent amount till 33 to 35 and was ultimately out at 36. Friday, when I bought stock sell 26 and 25s, yesterday at 27, I was selling. Today at 27.60, I was selling more. In other words, I'm taking profits sooner if I'm on the long side because I don't see a ton of stuff I love yet. So that kind of explains. Today is different than a month ago where we are time frame, where we are after earnings. So I'm shortening up things. I'm looking for less. I'm locking in gains sooner. Goes on the, when I'm long and I'm wrong too. Thank God I've been wrong a lot, but I'll take losses quicker on the long side because I just am not that enthused on the long side. The lower we go, I will become enthused. I was hoping Qs would get closer to that 200 day. So anyway, that explains how our mindset changed over the past month.
Another question, given that yields are rising and considering historical macroeconomic scenarios where this often signals a market downturn, so when yields are up, market goes down, do you think it's time to fully cash out and focus on hedging?
No, I focus on hedging already. I've been hedging
Mhm.
for the last month. I've been very short Qs a million times, starting at 500 like a while ago, but also just recently. So that's the first thing. No, it's time to start hedging. Like, I don't know, it was 3 weeks ago. Next, unless if you're a small trader trading 50, 100, 200 grand, and you just like to be not take risk overnight, sure. But I want to make it clear, almost nobody ever got rich by always just being flat because the market's hard. The biggest
Mhm.
opportunities for me come when the market's hard. So a guy like me is rarely going all flat. Like I had Immunome up today, $1 from where I bought it last week. So that's not my shtick. There's times to have less risk on, which I felt for the last few weeks, and I've done that. There are times to take profit sooner. Google 151, I was out right this morning. But just to be flat everything, you'll miss 4,000 ideas. So I think guys who do that don't they don't really. The best way to say this: when you're that guy or girl, you are reliant upon the market. There is so much opportunity, even when markets are crashing. There's sometimes a great long, sometimes there's a great short. There are now as many shorts as longs, and we like shorts, right? Like last week, I had a 6 short, and I think it was SMCI. But just to
Mhm.
be flat because the market's hard, I am not a believer in that. I think the best opportunity often comes when the market's hard. May I point to August 5th when everyone hated the world and decided we had topped, and I got to buy Nvidia at 91 and then watch it go to 130 in 3 weeks. So just being flat because the market's tough is not something I believe in. Taking less overnight risk, having less positions, taking profits sooner, that I all agree. And if you're a small account and you're just trading for cash flow, okay. But otherwise, when I see a guy running 7 figures, he's like, I don't like the market, I'm just flat. I don't know. There's usually something that can work even in a flat market. So I'm not a big believer in all in, all out. I just think a lot of people never get back in.
Mhm. Great. All right. And then if you have any opinion right now on IWM.
Yeah, that's an easy one. So if the economy gets too soft, which I said this earlier in the week, I hate when people chase price. It's going to be tough. So IWM is simply this. It is the most challenged index because you need to have a soft enough economy where inflation is declining, so we get those rate cuts, and then that happens, which already happened, and you need it not to get too soft that the economy and jobs are about to fall by the wayside. And then who the hell wants to buy smaller companies that are levered with debt and don't have a lot of cash flow? So it's a really tough one. So I'm kind of day by day. Ultimately, I think if we get enough rate cuts and a very dovish Fed, whether it be a half a basis point or a quarter point, and very loose talk, then maybe it could work October, November, December, much like we saw last year, which would also mean XBI works. So I think this month I get why it's tough. I haven't touched it. I may have touched it one time, and I don't even know if I did. Bottom line, I'm not long now. Haven't looked at it in a few days. It's going to be tough. You need to see the economy hold up. Things like we saw with Allied today, specifically, hurt IWM. That's a major issue. So you need to see less of the Allied news and less of the JPM news.
All right, great. All right. So if you want to work with David Prince, for everyone who's with us live, we have a great audience here. You can go to t3live.com/dp to apply to join the inner circle. This is a screenshot from the room last week. Great day in the inner circle, excellent communication and game plan pre-market. And that's a really important part of what David does in the room. He lays out, he has a morning call every day around 8 a.m. Eastern, where he lays out what he's looking at, gives levels on multiple stocks. I listen to it every day, and I write down those levels so I can see what they're doing in the room and watch. But this morning you had 1, 2, 6 stocks that you were giving key levels on for the room, so that people have a focus and know what to look at. Obviously, there's thousands and thousands of stocks out there trading every single day, all day, but David gives the room places to focus. And I think that's really important and really unique of what you do for the room. So if you want to go apply to join the group, you can go to t3live.com/dp. David is a real trader, so I'm going to let him get back to doing that. And we'll see you guys here next week. We won't be here in the morning. We're doing an afternoon little special thing with the whole group, David, Kira, Rick. So keep your eyes up for that. All right. Have a great day, dear.
For joining all.
David.
Good day.
All right.